narrow on the call side, the potential for those longs to appreciate, is also pretty big. And it's something I've been thinking about. It would represent a big stylistic change for me, and the
Hmm.
dynamics of the trade would be certainly different. Hey, I'm Brian, Doc here.
Hey, Dr. Meadows, good to hear your voice, my friend. Good to hear your
Yeah,
voice.
it's been
Hey,
it's been tough to make it on lately. Always had stuff going on in clinic or whatever, but
hmm
got a little time today. Obviously, you're discussing the jobs stuff with respect to the markets.
yeah, but I'm done with that. If you wanna
Yeah.
chime in, please do. But um, I'm ready for whatever you wanted to discuss this morning.
Yeah. I mean, I definitely had a good week. Three winning days and one flat day, and
Hmm.
I'm not sure what's going to happen today with we had the what we had some macroeconomic news pre-market. I'm sure you probably already talked about.
Yeah, the employment
Um,
numbers.
okay, I didn't seem like it was like a huge reaction
No.
to it. But it seems like, there's just a baked in, kind of a big drop or something like that, on a day like today. You know what I mean? A big move. And so I kind of tend to wait, see what happens there. But I'm trying to think, was there anything notable about any of the days? Um,
That
it might have
cash
been,
that cash neutral adjustment one, that's interesting. If you want to talk about that a little bit, I think you did that yesterday.
yeah, that was in response. So yes, if we look at the plus the 660 in the green and then the minus 600 there in the red,
Hmm.
that was basically in response to the market going up, against me and whatnot.
Hmm.
And I kind of followed that strike for the remainder of the day,
Hmm.
and it wound up flirting with it. I think it actually did get above a 3x loss, so it turned out that was a good decision to go ahead and make that adjustment, you know what I mean?
Hmm.
And so I basically,
Can you explain that a little bit? Because I know you go over in a
yeah,
statistical group trading course. Explain what
yeah,
you mean by a cash neutral adjustment and why
yeah.
did you do it?
Yeah, okay. So I think in general, everybody would agree that are trading the zero DTE right now. With the VIX being kind of low as it is and whatnot, the distance on the call side is not much. It doesn't take much to get a 3x stop. And so depending on, when you put the trade on, the ideal scenario is that you put the trade on and you're in a window where the market is going to stay relatively neutral initially,
Hmm.
and both of your short strikes can get some green on them. But, you know, no matter what you do, there's always going to be times when you put the trade on. And so my initial strikes were let me so I can't get that a little bigger so I can see. I'm on my phone here actually. What was that
Okay, no
initial
worries.
put and call strike? It was
So initial,
40, 45.55 was the initial
yep,
put strike, right?
yep.
No, 45.55 actually was the initial one.
Oh, okay, I missed that. Okay,
Yeah.
that was right
And
there.
then
Okay.
right, and then the 45.95 was the initial call strike, right? And so relatively soon after putting the trade on, the market started to march up a little bit. And so I made the decision. I was like, yeah, since I haven't gotten any good decay on that call side, and it's
Looks
and
like
it's going against me.
looks like your 45.50 was the initial one. Because when you did that cash, what you're about to talk about, um, because you got two,
Yeah,
it probably wasn't the 45.55
yeah,
your initial put.
that's um um correct. And roll the call side up to a new strike. Was it only 5 points? Was it only 5 points from 45.95 to 4600? Yeah, it looks like
Yeah,
it.
Yep.
Yeah,
That's what get.
correct.
Yep.
Yeah,
You moved it here. Yep.
exactly. Mm-hmm. Mm-hmm.
5 points can be big in a zero DT
It,
environment.
it, well, and in a low VIX environment too, right?
Exactly.
You know,
Exactly.
exactly. Yeah. So 5 points is big, which also has me thinking about something else too.
Hmm.
I've classically been a 50-50 wide kind of guy with
Hmm.
my longs, right?
Hmm.
On the call side, I will say on the call side in particular, if you do go narrow on the call side, the potential for those longs to appreciate, is also pretty big. And it's something I've been thinking about. It would represent a big stylistic change for me, and the
Hmm.
dynamics of the trade would be certainly different.
Hmm.
We talked about how you'd have to stay in the trade longer, in order for it to, decay out and everything. But
Hmm.
that potential for those longs to appreciate in a low VIX environment like that on a decent up move, that has some potential to be a helpful thing too. Because you said it's a
Hmm.
it's a lot it's a big change, 5 point strike difference in this environment. You know?
Yeah.
Yeah.
Just to clarify this cash neutral adjustment, I'm gonna just ask a couple of questions. So the market was the market was going up yesterday, right? And
Hmm.
it had a decent size up move, and you notice at one point that you can roll up your puts 5 points, and and you can roll away your call 5 points, meaning that you can move it away from the at
Hmm.
the money, and
Hmm.
you can do it for basically a cash neutral adjustment, meaning that you're
Correct.
receiving a credit, and
Hmm.
you're doing a debit, and it's basically
Hmm.
neutral. And this
Hmm.
is this is how it kind of played out like this, right?
Correct.
And
And the other thing that I did too was I actually added some more contracts at that 45.50. Like,
okay, okay,
and yeah, so I wound up being a little asymmetric in terms of
okay.
how much risk I had on the one side versus the other.
Mm-hmm.
And that is also something I'm again playing around with. I don't want to confuse things and be too different from like what's in the course or whatever, but sometimes I've been, as opposed to doing like a true full roll up per se, I
Mm-hmm.
might, if I got 50 cents credit, say for instance, originally on the strike, and maybe it's decayed down to like 25 cents or something like that.
Mm-hmm.
So I'm like a half winner. I might add, 10 more contracts or something like that at that same strike. And it's
Mm-hmm.
mainly to minimize the whole whipsaw kind of thing potential, because I'm still leaving on that original like 3x stop on.
Mm-hmm.
So that additional that additional risk or credit that I'm taking out, it could really lose big if the market did go back the other way and stop out. But I'm at least giving myself that much more distance, for it to make the market have to make a really big move as opposed to like rolling up, 10 points or something like that. You know what I mean?
Yes,
So that's
yes.
just something I'm also kind of playing around with a little bit too, because again, I'm trying to keep the losses, minimized.
Yeah, that's a little balancing act with that, right? Because
Hmm. Hmm.
you're saying I'd rather get a higher probability of winning, but you're adding more potential max loss, or not max loss, or stop out loss amount. You,
Correct. Because like, I'm putting on that initial credit if it's at 50 cents and I say I got like 10 contracts on, and
mm,
you go to a 3x loss on that, right? That's $1.50, right? So it's three times the 50 cents. But if I put on another 10 more contracts at $25 a piece, and I'm still
mm,
letting that go to $1.50 loss potentially, because I'm still at that
mm,
original same strike amount. Those are actually be what? Those are like 5x losses. You know what I mean? If the market were to really go back down that far, you know what I
correct,
mean?
correct.
So it is in a way. See, I'm viewing it as I'm trying to give the market as much, movement, as it wants. So I still kind of view it as less risky than rolling up, even though you might collect more credit per contract. I still think you're ultimately safer being further away. You know what I mean?
I would agree to that. I would definitely agree to
Hmm.
that because the times of huge whipsaws if you remember them, but they don't happen very often. Right? And
And in this case too, sometimes it's not with this low VIX environment. It doesn't have to be like that huge of a movement. Because like if you went back and looked at well, I don't know if it was it was this day's move or the day before or whatever. You know, we had a bunch
mm,
of just we had like two really decently brisk downward candles. You know what I mean?
mm,
Just kind
mm,
of at random points throughout the day, and it might have been like a
mm,
or a 10 or a 12 point drop. Not a tremendous drop magnitude wise, but in this VIX
mm.
environment, it's kind of a big drop. You know what I mean? And like and to have rolled up 10 or 15 points, you might have taken a quick stop out.
Mm.
Yeah.
Yeah, I think that was the case that day that you kind of broke even that day. Um,
Oh, that was
this
the
week, I
that might have
think.
been the bond auction day where things dropped at like 1 o'clock in the afternoon, really briskly. I remember
Yeah,
that was one day in particular that was not great.
yeah, yeah. So it says, let me see. I think it was, what was this? The fourth? What day is the fourth? The fourth was I'm sorry, I'm looking at a calendar real quick because I just don't
Yeah.
remember. The fourth was Monday. So
Okay.
uh, on Monday it says plus 1K, got in early, took some heat on my initial puts, but fortunately the market cooperated and appreciated all the
Okay, so that
inside
was
Jack.
oh,
Okay.
that was Jack talking about it. But there was a day, and I
Yeah, that
remember I
wasn't it.
talked about it in our teaching session because it was
Uh,
the bond auction at 1 o'clock, and it wasn't like a high impact thing or whatever, but that's what wound
mm,
up dropping the market pretty briskly, like right at around 1 o'clock. And I think
mm,
I took a stop out that day. That's when I definitely remember fairly recently.
okay.
But
All right.
yeah.
Yeah, I don't want to bring up. I don't. Monday was tough. I don't want to bring up Monday again, Jack. But Monday was tough. Yeah, Monday was a tough one. So you did okay based on the timing of when you came in. I
Yeah.
think.
I think Monday had a couple of decent, red candle dips, I think as well.
Mm,
But yeah, man, it's not
yeah.
not a ton of movement
No,
to
no,
to
no.
get there.
But that's that. But it's great. You're having a great week. I think you did well in November, and
Yeah,
I know you've
yeah.
done well this year with this strategy. So
Mm-hmm.
it's
Yeah.
it continues to produce after this is like I think your third straight year of doing this, and it's
Oh
been,
yeah, I'm definitely positive. Oh yeah, for sure.
yeah, yeah, and it's you've been doing it in different environments. So you guys, if you're interested in learning this, you have to put in the time and the work to do it. But it can be definitely a lucrative type of strategy that Dr. Meadows teaches in the statistical day trading course. All right. So anything else you want to add, Dr. Meadows,
No,
before we
sir.
move on?
I'm good.
Okay. Okay.
I'm
Thank you
good.
so
Thanks.
much for jumping in. It's good to get a recap from you, and that cash um, neutral adjustment is pretty phenomenal. It's awesome. You got to be able to see what's going on so you can adjust. You kind of being proactive before you stopped out, and that's the key. And if you can do it for basically, even, you can turn a trade that could potentially be a stop out, like you noticed yesterday, would have potentially been a stop out, or would have been a stop out, and then that would have made the trade a little more difficult. But and when it all said and done, you came out with $1,200 plus, which is nice.